Today, the co-founder of Solana explains the platform's meteoric rise. Plus, cryptocurrencies react to the Fed's decision to raise interest rates. Welcome to CNBC's Crypto World, on location in Rockdale, Texas, which is just outside of Austin. I'm MacKenzie Sigalos. Today's top story is what we have all been waiting for. The Fed has hiked interest rates after warning investors for months that this was coming. Now, normally we cover all the price moves, but markets are moving quickly in response to the Fed's decision. So it's best you head over to CNBC.com for the latest number. Fellow anchor Tanaya Macheel did speak to Joe Orsini of Eaglebrook Advisors on what the Fed's move means for crypto going forward. Here's what he had to say.
Joe Orsini, thank you for joining me today. Let's just start with a broader picture of the market. What do you make of the moves today?
Sure. So we're positive on today's market moves, and you're seeing, reduction in overhangs and certainly around, the Federal Reserve's path and process of normalization. And so what we're seeing is as markets find further information about what they can expect around how many hikes this year, how fast the rate hikes will occur, reduction overhangs are occurring right now. And so as you're seeing a green shoot today, and you've seen a reduction in the uncertainty around the geopolitical risk, and you're seeing positive signs about that. And so markets like that, and markets are, finding these levels attractive, particularly for long-term investors.
The Federal Reserve wrapping a key two-day policy meeting today. Investors have had rising rates on their mind for a long time. So going forward, what does a rising rate environment mean first for Bitcoin and then for cryptocurrencies more broadly?
Sure. So, we're positive on the ability for Bitcoin and digital assets to remain resilient through a rate rising environment. And just as you said, markets have looked forward to, the Federal Reserve's path and process of normalization for months now. And really the pullback that occurred began in early November. So Bitcoin and ETH alongside, NASDAQ Composite, high growth, momentum, technology, small caps, all of those put their highs in early November. And so the bear market, or the pullback that's occurred on this uncertainty, is about 3.5 months old from now. And so what we're seeing is, the positive risk reward to the upside. And what we've seen in the most recent rate rising environment, 2015, the Fed hike, 2016, the Fed hike, they did 3 and 17 and 4 and 18. Bitcoin was actually up 2,000% in that period, and it actually experienced its parabolic advance to 20,000 in that period. And so to us, rate rises don't necessarily derail bull markets, and we continue to be positive on the ability for Bitcoin to remain resilient.
Bitcoin has evolved so much, though, since 2018. We talk so much these days, I'm sure you do too, about its correlation with the S&P 500, really a macro-driven asset these days. Does that affect your outlook at all?
So we think that's overall a positive, right? And so for investors with traditional portfolios beginning to include Bitcoin, they want to know why it's performing the way it does and why it's moving the way it is. And so as we've seen correlations move higher, it may be less of it's less of an uncorrelated asset. But what we've seen is now market moves beginning to make sense. And so when you see Bitcoin pull back, but you also see technology pull back, you see risk assets pull back, that's comforting for Bitcoin because it's not necessarily an idiosyncratic move. It's more of a macro specific move to the downside. And therefore, as we said, if we see these overhangs reduced, we can, be positive about the ability for Bitcoin to bounce from these levels. What concerns us really, potential for an economic slowdown and really how that will affect broader risk appetite. And what we've seen with the increased inflation, people are feeling pressure at the gas pump, they're feeling pressure at the grocery store. And so the broader appetite, the broader willingness to take risk, of course, can be a marginal headwind to Bitcoin. But at the same time, we continue to say it's, it put in the lows of the year right around the January FOMC meeting. And so the bounce that we've seen since then illustrates to us that it remains resilient and that there's a lot of good to come from, the potential Bitcoin throughout the rest of the year. And maybe for the fact that the lows might have been put in place thus far already.
Bitcoin, no stranger to volatility. I would even argue that the volatility with Bitcoin has been a lot more tame in recent months, but there is a lot of volatility in the broader market related to all of the geopolitical tension happening right now. Some good news this morning out of Russia and Ukraine, the two countries have said that they're making significant progress on a peace plan. Of course, there's still a lot of uncertainty around that, and I think that there really needs to be an actual ceasefire before we kind of close the loop on that. But what do you make? what will the impact of that news have on the crypto markets in the near and the long term?
So we think a ceasefire would be very positive for markets. And we've mentioned, the overhangs. First, it's monetary uncertainty, and now it's geopolitical risk. And as we see those overhangs reduced, we could expect markets to have a better expectation of what's to come in the future. Volatility has remained sticky, but ultimately volatility should diminish, and that would be a positive for Bitcoin investors for sure. In terms of Bitcoin's volatility, Bitcoin has experienced, diminishing drawdown trends, which is good. And so as you've seen Bitcoin, which was maybe 120% vol asset, it's moved down to about a 65 vol asset. Those are all good signs for institutional investors and for really Bitcoin to be a meaningful part of someone's portfolio as volatility trends improve.
All right, on to our main story of the day. At South by Southwest, I spoke to Raj Gokal, the co-founder of Solana, a blockchain network that many experts say is the leading competitor to the world's most used blockchain, Ethereum. Raj told CNBC about the platform's spike in popularity, the network's rise in the world of NFTs, and he responds to critics who say that the blockchain is so fast and transactions are so inexpensive because it has a centralization problem. Here are the highlights.
What's powerful about Solana is we set out originally to make a blockchain that wasn't just 10 times faster and cheaper or 100 times faster and cheaper, but really did the thought experiment of asking what's the cost of the hardware and the network bandwidth to run a network, and let's get it as close to that as possible, because those are the physical limits of cost and speed and throughput. So it's the fastest, cheapest, and most scalable network in the world today. We expect it to always be and to improve over time. And already today we're seeing more transaction throughput than all the rest of the blockchains in the world combined. We've already been really surprised. Blockchain is a very surprising space. We started in DeFi. So, in 2020, 2021, we saw a big boom of financial primitives, on-chain central limit order books. So like Coinbase as an on-chain application, or NASDAQ. We saw borrowing and lending protocols get built out. That's a very mature, thriving ecosystem with tens of billions of dollars flowing through it. In June of last year, we started to see the rise of NFTs in Solana. And that's been a whirlwind. We've been completely taken aback by the type of creator activity and audiences and communities that have formed around NFTs. And it turns out that performance matters also in the realm of art and collectibles and gaming. And so, we're seeing those verticals boom right now. And a lot of those creators and audiences are here at South by. What we saw last year was, in the beginning of the year, a lot of the big high-profile NFT projects and artists were very high price points, very kind of celebrity status, and drops that were very constrained. So a lot of the centralized marketplaces were forcing artists into competing for a one slot per week of being able to do one big drop, and there were many millions of dollars. What we've seen with Solana is kind of what we expected to happen, what's already happened in Web 2 and the rise of the internet, which is the long tail of creators. Today we've seen almost 100,000 projects get launched with Solana because it costs about $1 to mint, so it's not very expensive. And it's very accessible for end users to buy a variety of projects and belong to a number of communities. In the last 8 months, we've seen 7 or 8 times as many NFTs get minted as on Ethereum or the rest of the industry combined. $800 million in primary sales. $2 billion of total trading volume of these NFTs, and 100,000 projects and 1.5 million users. And it's just growing. It just keeps growing every week. There's tens of thousands or hundreds of thousands of users that are onboarding. So we kind of see this as the beginning of the Web3 long tail creator economy. And we're honestly holding on for dear life ourselves, just trying to keep up with these trends, because every week people are building off of each other's projects, and the art styles and the communities are evolving. I think where we see it going is, these communities will launch their own brands, their own games. There'll be tribes and guilds and clans within games. A lot of the games that get produced will have very easy, intuitive in-game creator tools. And so we expect this to keep booming. We want to see all these numbers go into the hundreds of millions or billions. I think the way I think about it is, humans are competitive people. We like to compare numbers to each other, but the way I see it is the space is growing so fast. There are so many users onboarding, and I think we're still in the very first leg of it, that it's already growing too fast for any one, piece of infrastructure or one application or one use case or one brand to take the whole pie. It's just impossible. There's all ages, all walks of life, all socioeconomic backgrounds are onboarding into crypto. They're all wanting to come in, and they like different things. Where Solana is focused is where are the really high frequency, high performance, low latency applications. A lot of that ends up being what users like to do on front ends, where they like to see snappy experiences, and where you want to see lots of assets traded very liquidly in a big global market. Outside of that, there's so many areas where other chains can thrive and flourish, and everything's interoperable. The interoperability between every chain is basically feature complete at this stage. So assets can move on and off of these chains at will on users' behest. And I think what we'll expect to see is that users will just go where everything's easiest and fastest. So that's what we're focused on. Honestly, my view is everyone in the space has a move fast and break things mentality. Things are breaking all the time across the whole industry. Every chain has had some form of downtime or performance issues or accessibility issues at some point. It's all just a matter of seeing and testing, the actual infrastructure and design in production with real people all over the world, with a network that's run by a decentralized group of network maintainers. That's really hard problems. I think what we expect to see is every chain, every 10x or so, is going to see some kind of issues they have to resolve. The big differentiator is how fast do you resolve them, and do people leave? Do developers leave? Do users leave? What we've seen is we see no drop off when we have performance issues. In the next few releases, we have very permanent fixes that we expect to take us through the next 10x of growth. I think our stance on decentralization is let's find the things we can measure and compare based on that. So for us, we have 1,500 plus nodes on our mainnet. That's the largest of any proof of stake network besides Ethereum 2, and it's not 1/10 of Ethereum 2, it's about half. We see a Nakamoto coefficient, which is the minimum number of people needed to collude to censor or halt the network. It's about 20 on Solana. In other networks, it's often lower. And even in Bitcoin and Ethereum, when you consider mining pools, it's around 4 or 5. So on the measurable metrics, that's what we're focused on. We think it's amongst the most decentralized and censorship-resistant networks in the world. But the fact that people don't recognize that or see that yet, we also see as our fault. We want to get to a point where it's a no-brainer, it's obvious. So we're focused on 10xing those metrics as well.
Before we go, we're talking to a lot more crypto investors and innovators at South by Southwest this week, so be sure to check back for more from Austin, Texas. That's all for today. Crypto World will be back again tomorrow, and we will see you then.